Japanese index, which is seeing a big gain. It's up around 3%
I think we're likely to have, obviously, another quarter-point increase.
The FPO will proceed on current pricing and on the current timelines.
The first tick is on the downside for the market, so down almost about 40-odd points.
I think it's going to get worse before it gets better because there are no signs of bottoming out on the charts.
There is certainly a demand recovery of, 3 to 5% in retail terms in the domestic motorcycles business.
Out of the 88 questions that they had posed, 62 remained unanswered in the Adani response.
Now we're at 17,550 in the red for the benchmark indices. We've lost about 50 points in the Nifty.
What MSCI has done over the weekend is that they have said that they have now put out a consultation paper, and in further course of time, they will decide on how they treat the Adani stocks, which are part of the MSCI Global Standard Index.
As on 12 p.m., total subscription is at about 2-odd%.
About 64% of the people said that changes in personal tax regime would be most important as compared to about 12% for corporate tax.
The total exposure of LIC as on Friday closing stood at 56,000 crore rupees in all Adani Group companies.
Nifty is down 120 points as we speak.
Well, that was a day so far, and what a day it has been. Hello and welcome to a fresh new edition of Closing Bell, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me in the studios, my colleagues Rima and Surabhi. And of course, from the newsroom, we have Nigel joining in as always. Guys, hi. Good afternoon. Maybe the final leg of a long drawn-out kind of day panning out. And we've had many legs. The latest, of course, is that there is a bounce, which has basically taken us back to 17,550 levels, which is basically an area of a lot of clusters, a cluster of supports there in that 17,550 area, and we are exactly there once again. Of course, as we've been saying, this is, 0.5% to 1/3% lower. This is the best we've had in the last couple of hours. So let's see if this lasts or not. Maybe we'll have one more round before markets end, a full 1 hour to go. But it's been volatile, no doubt about it. If in case the market breaks the 17,550, a close above this will be ideal for bulls than those who are hoping that maybe from here the market does a bit of a turn. But if it does not, then the next support is only, a good 200, 250 points lower at about 17,205. It's a important retracement area. Bank Nifty broke below the lows earlier, and it's got supports at 39,970, a level we put out in the morning as well. We're at 39,917. So, this could also swing. A very similar kind of situation on both the Nifty and the Bank Nifty with the recovery we've had from the lows. The Adani Group stocks, of course, are all in focus. So, three names first on your screen. These are all cash stocks, and you can see, what's happening in the three, all down 20%. And the names which are in the futures and options segment, they're doing a little bit better. Adani Ports, Enterprises, Ambuja Cements, they've got some green. And we'll talk more about this, but a fair bit of pressure still on that group. Specific stocks, of course, taking it on the chin once again. Third straight session ongoing, and a new, the fresh day for this new week as well. It's a big week with the budget, but I don't think anyone is really talking about the budget or what is to be expected. All of the focus is what is happening here with this group of stocks, and of course the impact it has on the broader markets. Guys, hi.
Hi, and tomorrow I think at close to 5 p.m. once all the subscription is over, we'll know whether the FPO has sailed through. I think that's when the story will end, right? About the Adani Group and what the future. Or begin. No, I meant end. At least we'll know, right? Yeah. What's happened, because right now we're still, speculating. But you remember the time, right? Exactly a week back we were saying, oh, it's another day and the markets have not moved. We're exactly where we were 24 hours prior, so range bound. And just look at the way in the last 3 days there's been so much upheaval in the markets. Taking stock of the fall over the last 3 days, the Nifty is down about 550 points. The Nifty banking index has lost close to 2,900 points. This is Wednesday, Friday, and today's fall. We've been talking about the sell-off in Adani Group stocks. Adani Ports, Adani Enterprises are down about 20% over the last 3 trading sessions. But the other names, Innocent Bank, 13% down over 3 days. SBI down 10%. ICICI Bank, that's down close to about 7.5%. Some more important levels, Today, the intraday low was 17,400. So from that level, the markets have bounced back close to about 150 points. Another level to track will be the 200-day moving average, which is 17,290, 17,300. IT is emerging as a safe place to hide where money is moving into. So through the course of the trading session, the IT stocks have held rock steady. The Nifty IT index is up 1%, with names like Infosys, HCL Tech seeing pretty good rally. Even Wipro and TCS are higher up in the grain. Bajaj Finance has emerged as one of the big percentage gainers on the Nifty. In fact, the top gainer, it intends to enter into new segments of auto finance, commercial vehicles, microfinance, agri loans. So looking at new products to continue its growth, and that's something which has probably got the street a bit excited. But let's see. It's just like this is one day minus 1 hour, and it just feels like it's been so long.
For me, it feels a bit like Friday. The difference is we don't have two holidays coming up next, because it's been such a roller coaster, right? Prashant, I'm sure you would have heard this, because the whole chatter over the weekend was that this is going to be the big short covering Monday, right? We didn't see that. I don't know if some of that trade is now beginning, because we're again recovering quite dramatically from the lows of the day. So is this much anticipated short covering move, is it starting now? We'll have the answers in the next 60 odd minutes or so. In terms of levels, you folks have already mentioned some of the technical levels. In the low, I was just looking at the lows. So the previous low of the 23rd of December, one thing is very clear. In the 4 heavy days of selling that we've seen, consecutive 4 days of selling, the December 23rd low was decisively taken out, and that's something that we can say with certainty. Just in terms of the low, now we are back at levels last seen around 3rd week October, 20th of October to be precise. The low from which the market turned was actually the 30th of September. That level is still some time away. I mean, 16,747. And if we do start getting the short covering move that everyone's been talking about, then who knows? But this is where we are. Banks and Rima highlighted some of the stocks that continue to be under pressure today as well. That index is down about 8% for the month. The reason the Nifty is down only 3.5% is that you have the IT soldiers to thank. The bulls have the IT soldiers to really thank, which is why this picture on the Nifty is not looking as ugly as the Bank Nifty. But numbers have been coming in. PNB. By the way, look at the Gail stock. Numbers not very inspiring. Gail's down 5%. We'll talk more about that as we go. But Nigel, what all are you tracking? What a roller coaster Monday.
Well, just one or two quick points I want to make. Today's day's low, as you all mentioned, is around 17,400. Now, the market, as we speak, we're still down close to around 50 points. Around 10 minutes or so ago, we were down around 70 points. You pull up the 17,500 put. If the markets are down, on a put, you should be making money, right? But that's not happened. Now, the premium out there is around 120 rupees odd. In fact, it's lower. And that's giving you a sense that there is writing at that particular level. So if you have to put out a level, that 17,400, 17,450 becomes an extremely crucial level. When the markets are lower, you're expecting the premium on the put side to go up, but that's not happened. So that's giving you some bit of a sense. Before we visit that 200 DMA, I'm expecting the bulls to continue to fight at these levels. And periodically, all through the day, we have seen some bit of short covering that's played out. So let's see which way this goes. But I think that's an important observation on the option side. Rima?
Okay, now let's tell our viewers what we've lined up on Closing Bell today. Gail is reacting to its Q3 numbers, complete earnings fine print coming up.
We'll get a technical check going on the market with Mitesh Thakkar of earningswave.com.
We'll discuss stock-specific action with Hemang Jani and Neeraj Diban.
In key earnings to track, we will get you expectations from L&T as well as Tech Mahindra.
And finally, we'll be joined by our Alpha Manager for the day, Neil Bahal of Nigen Capital PMS.
Okay, all right. Well, how should you position yourself in the last hour of trade? Mitesh is back with us with exactly that commentary. Mitesh, hi. Good afternoon. Update on what you recommended earlier and anything new you'd recommend.
So, Prashant, they've been maintaining a negative bias broadly till we cross 17,800. We did get some kind of a pullback. Now, a couple of things. One, we have been talking about the 200 average at the 17,300 level. Two, I think there was a gap on the 18th of October between 17,300 to about 17,400 levels, and we've tested that gap today. So there's good support over here. So we've mildly pared down our short positions, but still broadly trading with more of short positions. The overall bias is still negative. And would want to add in case we get a pullback. We'll cover shorts and look to go long only once we start getting past 17,800. Given the fact that we have union budget coming up, I think, anything is possible because short term the news can obviously influence the price movement strongly than the overall trend setup. So that's something which experience tells us that it's good to be slightly light, take some profits off the table and wait it out and see how the market is panning out. So I think that's the way we are approaching it. On the stock side, IT is one sector which is where long positions can be explored. Both Emphasis and TCS are on my radar. So Emphasis is something which I would recommend to buy with the stop below 2090 for targets of around 2165, 2170, which was the last swing high. And TCS is just trying to break it to fresh swing highs. So that's a buy as well. Keep a stop below levels of 3420 for targets of 3500.
Okay, all right. Well, thanks a lot for that, Mitesh. We'll keep coming back to you. By the way, we just had some numbers flashing for you on the screen, and we'll try to get an Abhishek to fill us in with more details. But PNB has suddenly moved to the low point of the day. The net profit number is sharply lower. The NIIs, though, have moved up. And I think the reason that the net profit number on a year-on-year basis is lower because the provisions are much higher on a year-on-year basis. Besides that, there is some improvement on the asset quality front. Both the net NPAs and the gross NPAs, even on a sequential basis, well, they have come down a little bit. So, the profit number has come in lower because of higher provisions. Otherwise, asset quality has improved. We'll try to get an Abhishek to tell us more about that. But that stock, one stock that caught my attention. The other one is Exide. Out there, you had margins that have stabilized around 11.5% or thereabouts. On the top line, there's a growth of closer to around 7%. I'm not sure whether the street wanted a bigger growth out there, but that stock as well has moved to the low point of the day. But from the frontline names, Gail is a stock that's under pressure. Sonal is standing by to run us through a quick analysis on those numbers. Sonal, post set of numbers?
Oh, yes, they are. It was expected to be a weak set, but the numbers are much worse than what the street was working with, and primarily led by their gas marketing, petrochemicals and LPG segment as well. Running you through the basic numbers first up, revenues were down 8% on a quarter-on-quarter basis, EBITDA down 85%, margins have come in at 0.7% versus an expectation of 4.8%, and profits are down 84%. Now, as I said, weakness was led by gas marketing, petrochemicals, LPG and hydrocarbons business. A couple of reasons why this has happened. Once, there were not enough supply coming in from Gazprom because of the force majeure. Also, there was a decline in LPG spreads this time around, and transmission volumes were also expected to go down, and gas costs had increased. So all these reasons have led to this big margin miss as well. If I go as per the segments, this time around in the transmission services, natural gas EBIT is down around 20-odd%. LPG EBIT also down to 92 crores versus 114 crore rupees. In the gas marketing segment, the company has actually gone ahead and reported a loss. So EBIT loss of 86 crore rupees versus EBIT of 363 crore rupees. That is because they did not get supplies in time and they had to buy higher cost LNG at spot prices. Petrochemicals, again, it continues to be a weak segment for the company. EBIT loss of 349 crore rupees versus 346 crore rupees. But now the idea is petrochemical spreads, they have bottomed out. LPG and liquid hydrocarbons, again, because of big decline in the spreads as well, that particular segment saw a loss of 29 crore rupees versus EBIT of around 500 crore rupees. So all in all, it's a top-down miss this time around. But going forward, we would like to know the management's commentary on gas supplies, gas sourcing as well, and at what price they're able to do that, because that will be the key in terms of their gas marketing segment, which is the biggest chunk in terms of their earnings as well.
Okay, thank you very much for that. The street is disappointed. Hemang Jani, Motilal Oswal Financial Services is with us now. Hemang, thoughts on Gail and the numbers they've reported?
Good afternoon, Rima. I think the numbers have been way below our expectations. In fact, the EBIT level, it's down 82%. Versus our expectations, the numbers are 82% down. PAT also, versus our expectations, the number is down almost about 93%. I think there would be a certain amount of one-off because of the non-availability of the gas. I think we will be able to form a view on it post the con call, which is scheduled at 4. But clearly, these numbers are way below market expectations.
All right, Hemang, stay with us. Another number which just came through is Punjab National Bank, which is also under pressure. Abhishek is here with the sort of prima facie, the details and how they look. Abhishek, over to you.
Well, Prashant, it looks like massive rise in interest rate is seen on both sides of the balance sheet, the yields, and that is the asset side as well as the deposit side, given the fact that cost of funds might have increased massively. However, the NII growth is robust at about 11% quarter on quarter. The previous quarter, NII was at 3.11%, and my calculation shows a 20 to 30 basis point improvement in its net interest margin on a sequential basis. While the top line is strong, the OPEX is elevated. So OPEX has grown by 22.5% quarter on quarter, which is massive, and that has kept the pressure on operating profit. There is a rise in NPA provision, which means that the credit cost on an annualized basis might have increased by 11 to 12 basis point quarter on quarter, and this you can see in the net NPA number that there might have been write-offs due to which they might have given provisions this time around. So asset quality has improved. Both the gross NPA and net NPA have improved on a sequential basis. Business momentum is healthy on the loan side, but deposit growth is weakening. So loan growth at 15.5% YOY is perhaps one of the best that you are seeing in last 2 to 3 years. Back to you.
Okay, got that. Thanks very much, Abhishek, for the details there on PNB. Hemang Jani is with us. Hemang, good afternoon, and great to have you on the show today. I'm not sure if you look at PNB, if you have any interest in that particular PSU bank, but if not PNB, then what about the others? Despite the run-up and the more elevated valuations now, would you still be a buyer in this decline if you're looking at PSU banks?
Yes, Surabhi. So what we've seen is that there is a massive selling which has happened in the last 2 months, almost about $5 billion, and bulk of that selling has also happened in the banks. So despite strong numbers across the private banks and some of the PSU banks, the sector is going through pressure, and the Adani saga has actually added to the woes. So I think, in terms of further pain, maybe, depending upon how things unfold, you might see some more downside. But overall, we think that if you're looking beyond, let's say, this 1 quarter and a little, 6 months, 12 months kind of a perspective, then banking does offer a great entry point, particularly the larger private sector banks. So we would be tracking these developments more closely and looking out for buying opportunities.
All right. Hi, Hemang. Good afternoon. Hemang, any view on BEL? Came out of that set of numbers. Stock is down 6.5% odd.
So, Nigel, I think the margin, there was some amount of disappointment over there. And, because the defense as a theme was, hyped a lot, there is some sort of a profit booking that we are seeing. But I think as a theme, as a story, it is looking quite interesting. And we would definitely be looking at, adding into it once we have some more clarity about, the numbers going into the next few quarters. So, definitely a positive view over there.
Another factor in BEL, one is of course margin miss, which she pointed out, is that the order book has declined for the 3rd consecutive quarter. So while they're executing, it's not getting replenished. So the order book has declined for 3 consecutive quarters now. I think in FY24 end, it was about 57,000. It's come down to about 51,000 crore thereabouts. So there's been that decline.
Absolutely. I mean, the oldest listed defense name, and it's come off quite sharply from where it was even a week, 2 weeks ago. The market is making a comeback, isn't it? I mean, 20 points down now. So like what we saw early on in the session, will we have a brief move back in the green? Let's see. It's possible. 17,583 is where we are at. There is no big difference in how these the Adani names are trading. It's still largely the cash stocks are all limit down, whereas the futures and option stocks are trading with some gains in the green broadly.
But the banks, Prashant, that's where everything's turning around. Pull up some of the names like an ICICI Bank. Look at the intraday chart, and perhaps that's where the short covering is starting to become a little more apparent now. All of these banks, Axis, HDFC, SBI, IndusInd, it's the banks which are now quickly rushing to break into the green side of the screen. ICICI has done that. The others are also trying pretty hard. IndusInd is still down about 4%. But let's see, I guess that's, that's one pocket of the market which is now really trying to push back on the upside.
I think that and Reliance, right? Reliance is also, even from when we started, I think it's moved up. It's at the high point, highs of the day, Reliance Industries. So the intraday will show you that. There you go. So that's banks and Reliance. making some difference. 26 points lower still, though. We'll see. We'll take a break here. Some exciting news. The most coveted leadership awards are back. CNBC-TV18 honors the visionaries behind outstanding businesses. Catch the most influential, incredible, powerful IBLA jury on the 8th of February right here on CNBC-TV18.
Welcome back. In the red now, down about 30 odd points. Not yet in the green, but as we've been pointing out, there has been a significant recovery in the market in the last 15 minutes of trade. 17,580 on the Nifty. The low today was 17,400. So from the lows, there has been a recovery of close to about 170 points. The low was hit at 2 p.m. We're in conversation with Hemang Jani of Motilal Oswal. Hemang, any thoughts on Kajaria Ceramics? That's another one which reported their numbers over the weekend. They indicated that October was weak. Things were improving in November and December, but then again, the month of January was tough. They also said in the conference call that the domestic demand was sluggish as real estate is starting to hurt now on account of the higher interest rates. Any thoughts on Kajaria Ceramics? Because this one also has been quite the favorite of the home improvement team, but the Q3 earnings were a bit subdued.
So, Rima, I think both the numbers and more importantly, the outlook has come as a negative surprise, even that we've seen a strong traction on the real estate side. And there was a hope that, the entire ecosystem around this real estate should see a decent amount of pickup. So was it that backdrop? These numbers have come as a negative surprise. And when you also look at some of the names like Pidilite, Asian Paints, I think that is pointing to the fact that there is a slowdown and perceptible slowdown across the consumption categories. So I think, we will have to wait and see if there is going to be any kind of a improvement or positive data points. For now, I think these stocks could go through some more pain before we see some stability.
Okay. All right. Hemang, we'll leave it there. Thank you very much for your time. Good speaking with you and appreciate it. We have Neil Bahal, a founder and CEO at Newgen Capital Portfolio Management Services. Neil, great to have you with us here. Thank you very much for your time. I mean, you talk about, sort of special situations where, we've spoken about those situations in the past. We've had a bit of a situation in the market overall in the last couple of days, Neil. How are you viewing it, and what is your overall sense? If you have a view, do weigh in.
So, well, we generally don't have a view on the market that the way we want to do investing is where we are looking at corporate actions and we're investing. So typically we don't have a market view. The market view that everybody seems to already know is that India is, the per capita GDP is very low and that's going to keep increasing. And these numbers are going to look very good going forward. So whatever happens today or tomorrow doesn't really move the needle too much for people like us who are, we have funds and we are investing for the long run. So yeah, we don't have a everyday view, but if stocks are becoming cheaper, it's something which is good for us. It's good for everyone because then you can do your long-term investing. Because on the whole, stocks were a little bit expensive in the general market. All the good companies that you like, they were outside of your comfort zone. So if they're becoming cheaper, I would not be the one to complain.
About that, and we'll quiz you on which ones have become more attractive and what you've done. But we have had a bunch of stocks from a group which have corrected significantly. Anything falls in your radar view, Neil? There in that space.
So ideally, we don't like to discuss stocks as such, but something which really stands out is Ambuja Cement. We don't own it. But Ambuja Cement is a good business and it's not really expensive. It's around the price of the open offer. So, I mean, if it were to fall lower, it would be nice for investors. But if people are looking to, in this group, then Ambuja Cement is the standout that we can have an eye on.
Okay, all right. Hi, Neil. Good afternoon. Good to speak to you as always. Ambuja Cements, that's an interesting one, right? Promoter entity, they bought stake at around 385. 385 is what it is at. And the promoter entity, the new promoter that is, will be infusing money at 420. So we get that point. But Neil, a couple of questions. First, on the cash that you're managing, what is the current cash levels? What are the levels, if you could tell us? Are you all deploying money? And also share a couple of ideas with us. You've told us about a whole host of special situations. The recent one that you all have deployed money with the due disclosures.
Yeah, so, I'm always believing keeping cash whenever things are not looking as per your thinking process. So right now in the fund, we have 16% in cash. So when the markets were going down, we are one of the few people who are not complaining. If it goes down, so be it. There are lots of ideas that are coming up, lots of demerged ideas which are listing, a lot of delistings happening, a lot of promoter changes going on. And because of the sideshow that is going on in the market, a lot of people have taken special situations and general investing off their radar right now. And they're just too much focused on the noise going on.
Neil, if you can share a couple of those ideas, whether it's a demerged entity or a change of promoters, give us a couple of examples, right? I mean, our viewers will appreciate that. Go ahead.
So the problem is that, we always tend to have our own exposures, and it's sometimes better not to discuss actual names. But there are lots of things going on. For example, in the footwear space, there's a company which is demerging. And once that the footwear division basically demerges and people actually compare that with the listed space where everything trades at 50 times EBIT, 70 times EBIT, that kind of range, and this company will be listing at something like 13, 14 times EBIT. So if you're looking for a demerger in this space, that's something that could make it be of interest. But I would not like to take names because we own these things, we buy and we sell, and it doesn't make sense to take names in this sense.
Point. So obviously you're looking at interesting areas where there's corporate action throwing up an opportunity, and you gave some examples there. What else makes it to your top holdings in terms of either a strategy or a sector? Give us some more color, some more insights.
Yeah, so, it's special situation is a way of investing, but the overall picture about India is absolutely fascinating right now. I'll tell you about my space, the way where we operate, the asset management industry, the kind of inflows we are seeing. I talk to other fund managers and everybody is seeing inflows, and it doesn't matter if the market is going up or down. We are seeing good amount of inflows. And being in this space, I can tell you sitting here that our AUM will be higher in the next 3 years. I know everybody's AUM is going to be higher. AUMs is basically the asset under management. Everybody is going to be managing more money. The mutual funds which are listed or the wealth management companies which are listed, they are all going to do a lot more business in the next 3 years, 5 years, 10 years. It's a certainty that's going to happen. But investors need to make a basket. They need to understand valuations, and they need to invest in an SIP kind of a format and not be bothered. Yeah, okay, markets may not do good for a year or two. That happens. But in the next 5 years, next 10 years, I can tell you with a fair degree of, in my mind, conviction that the wealth management space will be managing far more in terms of assets. The asset management space will be managing far more. And when that happens, the ancillary space, let's say the depository space, the custodian space, everybody who are listed who are listed currently, they're all going to be having more business. So I see no problem in growth. There's going to be a lot of growth in select space. Even the defense sector, for example, you hear that after decades, people like Germany are spending on defense. Countries like Japan are spending on earning. These guys are not spent on defense after the World War. They were not supposed to, but even now, even they are spending. So there are lots of very, very interesting areas in the market. Some of them, almost all of them, which are good, are expensive. So the markets coming down is actually a very good thing for investors right now who are looking at these very long emerging trends, and you may get good entry points. So defense, asset management, wealth management, special situations, value investing. I think it's a very fascinating story right now, India.
Okay, and a sector that you find fascinating, Neil, is the airport sector, where you've said that India's airport sector needs to be kept under your watch list. It's going through a very good growth period. The stocks listed here currently are expensive. wants to watch though on significant dips. Now, some of the plays, in the airport space or the growth in the passenger traffics would be Dreamfolks, which is an airport aggregator, a spend on increasing number of people traveling and the kind of credit card spends that they would have with the lounge tie-ups, etc. And the other one is GMR Airports. Now, what would be an attractive entry point? Because here you've clearly said that these stocks are expensive. What is an attractive entry point? How much more of a correction would you wait before you enter in?
I would think at least for, it's not better not to give actual names, but at least 20% correction for the listed space here would be very good for long-term investors, because I can tell you the travel per capita is projected to increase 5x in the next 8-9 years. So when something is going to increase 5 times, then the underlying monopolies in that space, if you get them at a good valuation, then you're set, right? You don't need to look at your portfolio every day, every 2 weeks, what is going on with the market. No, you just leave it and you let it go. But your entry price has to be very important. Valuation will play a key role. And all of these stocks which are coming off, from the peak, if you see across the board in defense or whether it is airports or wealth management, everything is down 15-20%. If they can come another 15-20% lower, then investors just need to identify the emerging trends, buy the best companies there and just sit back and relax.
Any other company in the airport space? We named two, GMR Airports, and the other one is Dreamfolks. We're not asking whether you've invested, because you've clearly said that you're still waiting for a better entry point. But is there any other stock which comes in this play?
No, these are the two which investors should keep in mind. And we were invested in GMR earlier when the demerger happened of the airport business, but we are not invested anymore.
Okay, 20% lower. Dreamfolks is already 33% off its 52-week highs, and GMR Infra is down 17% from its 52-week highs, but Neil is waiting for it to go even lower, perhaps 20%. Okay, it's 3 p.m. It's time to reveal who the winner is of the CNBC-TV18 budget quiz. But before that, we thank all our viewers for participating in this quiz. The question today was, what percentage of the expenditure in budget FY23 was allocated to defense? The correct answer is option C, 8%. And today's winner is Bhupin Kumar. Congratulations, Mr. Kumar. Remember, keep watching CNBC TV 18 and win prizes daily on the CNBC TV 18 budget quiz.
Well, let's take a quick break on that note. And as always, we'll get you the buy today, sell tomorrow calls from our technical expert, Mitesh Thakkar, in just a bit.
Welcome back. Well, the markets are holding more or less flattish as we speak. We just keep an eye on a couple of stocks in the broader markets. Stocks like Genius Bar. Earlier today, they won an order worth 2,500 crores. Remember, the government has been focusing on the smart meter space. And this order win is massive. The problem for the company over the last few years is that they weren't getting orders, so execution was always lower. They had enough capacity, but as we speak, Genius Bar is now up 8.5%. So just keep an eye on that one. Jindal SAW came out with its set of numbers a couple of days ago, and the numbers look quite good. There was margin improvement out there. The quarterly EBITDA is looking good, and they reduced some debt as well. So that stock as well is reacting favorably. So just keep an eye out on a couple of these stocks. Though the headline index is stuck in a bit of a range for the day, but from the broader markets, plenty of stocks moving around. Mitesh Thakkar is back with us. Mitesh, fill us in with the buy or a sell trade.
So I'll go with the BTSC or buy trade on Bajaj Finance. It's held on nicely in a market which has been declining, and it's reversing from very oversold levels. So this bounce back could extend. Look for a first target of around 6150 over here, and that's a buy with the stop below levels of 5950. And the other one is Coal India, more of a BTSC kind of a trade. Keep a very tight stop at about 223 half and a target of around 229 to 34 tomorrow.
Okay, thank you very much for that, Mitesh. The two big earnings that we will be tracking post-market hours, one will be L&T and the other one is Tech Mahindra. So let's kickstart with Larsen & Toubro and find out what the street expectations are. Vivek is joining in. Vivek.
Well, that's right. So Larsen & Toubro will be declaring its results. So to This particular quarter is expected to be a strong as well as a steady quarter from the company. Revenues are seen higher by close to 16.5% at the 46,100 crore mark. EBITDA is seen higher by close to 19% at the 5,385 crore mark. Margins are seen expanding 30 basis points on a year-on-year basis, while profitability is seen higher by almost 30%. What are the key things to keep an eye out for as far as L&T is concerned? Remember, the company has already declared orders worth over 34,000 crore in third quarter FY23. So any kind of order inflow guidance upgrade is something that the market will keenly anticipate for as far as FY23 is concerned. Revenue is expected to be led by a pickup across most of the segments. So strong execution in infra space, hydrocarbon, as well as the heavy engineering space is something that the market is anticipating as far as L&T is concerned. Also expect to see margin improvement on the back of the fact that there has been a certain amount of easing as far as raw material prices are concerned. Also important to remember that almost 2/3 of the projects that the company has actually have a variable price clause that is fixed in. In this particular quarter, the company managed to complete the divestment of the road assets, and also the utilization of these proceeds is something that we would need to keep an eye out for.
Okay, got that. Thanks very much for all of those details on L&T. That's not the only biggie. We'll also watch out for Tech Mahindra's performance in the quarter gone by. Rima, what are you expecting?
Well, it's going to be a muted quarter. So a dollar revenue growth of about 0.6%, a constant currency revenue growth, which should be closer to that number. Remember, this will compare with about a 4% roughly growth that peers have reported. If you can just pull up the comparison plate, TCS's revenue growth was 4%, Infi was at 4%, Wipro was at 4.1%, HCL Tech was 3.8%. In comparison, for Tech Mahindra, we're expecting about a 0.6-0.7% top line growth. One of the reasons is higher furloughs, particularly in the high-tech vertical. But the other reason is the company is pruning some of its low-margin work, the unprofitable business. This has been an ongoing exercise for the company. It's going to continue this time. And the other reason, of course, as I said, is because of higher furloughs. The company had even warned us in Q2 that the furloughs this time is going to be higher. So muted top-line growth. On margins, we're expecting a bit of a margin improvement, so margin expansion seen by close to about 40 basis points. The benefit of rupee depreciation will be offset by the impact of furloughs and lack of leverage on account of growth. The bottom line will be seen up close to about 0.7%. Key to track will be the deal wins. Last quarter, the deal win was about $716 million. Does it taper from here on, or is it strong like their peers have reported? And commentary surrounding the macro environment. The last of the big five IT companies to report numbers. The first four had already come through, and the numbers were encouraging from the large cap IT space. Despite all the worries about growth slowing down, this time, all the four IT companies reported good numbers. Their deal wins were steady. The pipeline, the commentary was pretty strong. They're watchful and cautious, but at the same time, it's so far at least not reflected in a big way on the numbers. So concerns were allayed. Let's see what Tech Mahindra has to report. But we've got Neeraj Diwan, Director at Quantum Securities, now joining us on the show now. Neeraj, what have you done in the last 3 days? Many stocks have collapsed. They're giving you a decline of 10 to 15%. Did you use this as an opportunity to buy, or are you still waiting, holding back?
Yeah, good afternoon. Actually, this time around, this Adani, whatever happened before the Adani Group report and the kind of massacre that we saw on Adani Group stock and even the bank names, I think we've seen a decent correction immediately before the budget. So market is becoming light, we're getting attractive prices, but then, we've also been waiting to put in more money. So we want to get some more clarity as far as what is going to happen with the budget. And then you even have the Fed meet outcome coming on first night. Better to wait out these two events also. By the time even whatever have to happen with the Adani Group stock, the FPO would have also come clear. I think once you get a clarity on these three events, then I think you can take a fresh call and make some fresh investments in the market. So we're also really waiting to put in more money into the market.
Okay, so waiting to deploy more. Those are SRF's numbers. The top line actually looks like a decent beat above the estimates. Neeraj, hi, good afternoon. Good to be speaking with you after the gap. I actually want to talk to you about earnings. We've spent so much time talking about Adani. Let me ask you this. So far in this result season, which has been the most outlier result for you that could perhaps sort of, merit action on the stock, a buy on the stock, just looking at management commentary or the numbers?
Yeah, good afternoon and good to see you back on CNBC. Welcome back. Yeah, actually, among the numbers, we saw very good numbers from Maruti. I think there it was very encouraging, the kind of numbers, margins, which has come, and even Tata Motors, so the auto numbers, the third one was Bajaj Auto, have been really outliers as far as expectations were concerned. So I think once you have this event out of the way, I think Maruti is definitely a good buy even at these levels with the kind of launch that they have, launches that they have later in the year, and then even the EV portfolio. So Maruti, second would be Tata Motors, which I think with this kind of a turnaround we've seen after 4, 5, 6 quarters, and the stock has also been underperforming. I think that can also, if this kind of a improvement continues, can be a real good for investment for the next 1 year. And then even Mahindra & Mahindra looks very good because valuation-wise that's very attractive and the company is still doing very well. So I think auto space is one where we've seen very good numbers coming. And then even on the banking space, I feel that we got decent set of numbers, but banking, because the banking space had done so well before the result season that it was more or less sell on news. Whatever numbers kept on coming, still there was selling going on, partly because of Adani Group exposure or some risk that some of the banks may have, or the perception that there might be some risk. So you've seen some correction there. But I think the numbers from ICICI Bank was really very good. I like HDFC Bank also. IndusInd Bank came out very good set of numbers in the private sector. And the valuation there are very good. So I think these two spaces still, I feel there's decent potential and one should be looking at opportunities.
Okay, all right. Hi, Neeraj. Just wanted to focus on SRF. On the top line, there's a small miss of closure on 200 crores. But what the street likes is this big beat on the EBITDA front. And the EBITDA has beat our estimates by closure on 7%. You pull up the candles, you'll see there's a big green candle on that one. From the red, SRF has moved into the green. And in terms of margin beat, it's closure around 330 basis points on. That stock is reacting very, very positively. And just take a look at it. We should pull up the intraday chart out there. The EBITDA number has beat our estimates by closure on 7%, which resulted in a net profit number as well, looking quite good. At some point of time, the stock should come up for you on the screen. Well, Neeraj, you just mentioned, a couple of those private sector stocks, banking stocks that you like. What about the PSU banks? They had valuation comfort. Some of them have taken a sharp knock in the last few days. Preference still towards the private banks, or you prefer some of those PSUs?
No, even the PSU banks, I think even the larger ones like State Bank, Bank of Baroda, Canara Bank, you've seen decent corrections. I think the credit growth is still very good. And once this, whatever happening with the Adani Group is over, I think then one can take a fresh bet on these. Fresh money can come in these kind of stocks also. So if I have to pick up in the PSU banks, I would go with SBI, Canara Bank, and Bank of Baroda in that order. I think there's still next 3, 4, 5 quarters, you can see decent credit growth. And even the margins have been intact till now. Interest rate also looking to have reached the peak. So you don't really fearing too much of interest rate hike from these levels. So I think these stocks also definitely deserve a look for investment.
Okay. By the way, today is an interesting day for some of these stocks that have been pummeled in the recent past. Indus Tower is case in point. In all this volatility, Indus is actually holding on to a gain of about 7.5%. Nykaa is having a good day. Nykaa is up about 6%. Some interesting moves in the broader markets. We'll do one thing. We'll take a break and discuss some of these stocks and these moves with Neeraj on the other side. Welcome back. Here with us on Closing Bell, and it's an interesting mix of red and green across the major indices. The sensex, by the way, is still negative. It's down about 0.5%. The nifty is in the green, and that's thanks to all the short covering that we've seen in banking stocks and the fact that some of the other heavyweights are holding up. Midcap index has been in the red for the better part of the day, so it's a little all over the place this afternoon. Speaking of some of the earnings, let's go over the SRF report card. Sonal is joining in with all the details. Sonal?
Well, for SRF, the margin number is much better than what the street was working with. Yes, it was expected to be a decline on a YOY basis, specifically led by their technical textiles business because of lower export realizations and demand crunch as well. But if we look at the numbers, revenues are up around 4%. The EBITDA is down 5.5%, but margins at 24%, much better than estimates of 20%. 20.9%. Profits are up 1.2% to come in at 511 crore rupees, which also is better than what the street was working with. As I said, technical textiles, it was expected to be a weak quarter and it has continued to be the case. The revenues there are down 21%. Packaging films also, the revenues there down by 6%. This is because of majority of supply coming in this quarter itself, something that the company had spoken about earlier as well, which was putting pressure on pricing as well. But it's really the chemical segment which has been the revenue and the margin driver as well. It's the chemicals business where revenues are up 23% and their EBIT is up 35%, leading to a margin expansion of 300 basis points. And this has been the segment which has been the revenue driver for SRF for the last couple of quarters as well. So yes, it is a beat, especially on the margin front, and that's the reason why stock has spiked to the day's high. We are waiting for the investor presentation, which just follows the press release, that is, which just follows the results in a bit. So more color in terms of demand and segmental breakup is something we'll get to know. But for now, on the back of this margin beat is what we are seeing the stock at the day's high.
Okay, got that, Sonal. Thanks very much. So that's a big result reaction on the upside, as is Mazgaon Dock. By the way, look at that. That's a huge margin expansion, a year-on-year expansion that Mazgaon has reported. That stock surging away as well. We'll just pull up the intraday chart for you there. You go, big spike on Mazgaon. Neeraj, do you track Mazgaon by any chance? If not Mazgaon, I also had a question on Gail actually. Gail has been quite a disappointment this quarter. I mean, top-down disappointment. Your thoughts on that one, perhaps?
I think Gail basically I don't track, but defense stock we track. So Mazgaon Dock has been among our top picks there, and even the numbers which you're flashing on the screen look very good, look very encouraging for the stock to continue the kind of good move that we've seen in Mazgaon Dock. The margin improvement in the last quarter also always, this current quarter which is going on, this March quarter is normally the best quarter for these kind of companies. So whether it's Mazgaon Dock, even Hindustan Aeronautics, so these are the kind of stock that we like in the defense stocks. I think their continuous improvement in margin and order book is there, and in the last quarter can also be very good for them.
All right, Neeraj, I wanted to ask you about Ultratech Cement. Last week, post their con call, the stock saw a sharp correction. Then it was a little bit nervous. Now, suddenly you have the other two big companies, that's ACC and Ambuja, that are going through a bit of a rough phase, at least for now. So Ultratech Cement used to be the big king, right? The biggest capacity out there. The fear was that these other two players will come together and try to take them over. What's your view now? From the cement pack, from the large cap names, will Ultratech Cement suddenly find preference?
Yeah, I think so, because it is just a sentiment, though I like Ambuja Cement also. But it is just a sentiment which has gone against Adani Group and Ambuja Cement ACC being part of that. So that sentiment will work against them for some time. It will take them some time to come back and come to their earlier prices, earlier highs. So I think people may prefer Ultratech Cement there. Though before this event took place, the pick used to be Ambuja Cement, ACC, and Ultratech. I think now it's reversed. It's Ultratech, Ambuja Cement, and ACC. So I think Ultratech should get the benefit of some people are avoiding Ambuja or ACC because of the group right now, because of the sentiment right now. So Ultratech and the cement sector as a whole looks good to me. I think with the kind of infrastructure, order book position, and the execution picking up towards the end of the year, I think the sector should do well.
Okay, we'll leave it there, Neeraj. Appreciate you joining in, and good speaking with you, as always, here on CNBC-TV18. The market closes with in the green, first of all. Second, with about a 60-odd point gain, 66 points to be precise. And three, it almost leaves off at the high point of the day, which was made earlier in the day as well, almost there. The banks also recovered quite nicely. The Nifty Bank will come up 1/3% higher. Even an hour and a half back, it was looking, just completely down and out and washed out. But some signs of life coming back as we close the day out. The Adani names, actually Adani Transmission is one name which was limit down earlier, which recovered 5% from the lows. That's a cash stock. The others, which is Adani Total, Adani Green, Adani Wilmar, they all are still limit down, but transmission picked up. And of course, as we've been pointing out, Adani Ports, Adani Enterprises are some of the other names. Ambuja Cements are some of the other names which were trading with some gains. Enterprises ends, I think, with about a 4-5% kind of gain. 60 points is what the Nifty will end the day with, 17,663 on the index. Guys.
Well, you spoke about the Adani Group. Apart from that, you had Bajaj Finance closing up with a gain of 4.5%. Finsa reports numbers today. That ends with a gain of 2.5%. IT names were on investors' buying list, with HCL Tech and Infosys gaining 1 to 1.5%. Reliance contributed to the recovery that we saw in the last hour of trade. Reliance Industries up nearly 0.25%. Asian Paints got hit post numbers, but today it recovered close to about 2%. On the losing side, Power Grid under pressure. JSW Steel, Innocent Bank have been weak for the last 3 trading sessions now. L&T subdued ahead of numbers, goes home with a cut of 1.8%. HUL also down and out. ITC is another one where you did see some weakness. But Surbhi, mid-caps, small caps, all of them mildly in the red.
That is true. I'm looking at a lot of the result reactions that came in, and it's been a mixed bag. I mean, you've got a BEL, for instance, finally going home with a cut of about 5.5%. Gail, we were just discussing, 4% on the lower side. But then you had, of course, the outliers. We just saw Mazgaon come in a couple of minutes back, and that stock is going home with pretty decent gains in positive territory. Pull up SRF and see the final close on that one. Again, thanks to the big EBITDA beat that we had. So those are some of the positive names. Indus Towers, even Easy Trip for that matter, Nykaa. So not all bad on the mid-cap screen, though the headline index was pretty much flat. BHEL, NTPC, by the way, some of the PSUs have had a decent run today, as have some of the smaller banks like IDFC First Bank, Canara, etc. Also on the positive side of the screen, but quite a roller coaster to start the week, folks.
And just one day done, 4 more to go. And of course, there's a budget thrown in, there is a Fed meeting thrown in. So, I mean, it's just getting started. But a little bit of recovery, I think, all told by the end of today's session. It's a rapid closing bell, but don't go anywhere. Our Monday special Wizards of the Street comes up next. Stay tuned.